Welcome back to our weekly breakdown of the U.S. markets. Now, on the surface, this week looked pretty sleepy, right? But let me tell you, underneath all that, there was some serious drama going on. Let's get into it.
So here is the big puzzle we need to solve. We got some really solid numbers from the big banks to kick off earnings season, and the big inflation report came in right where everyone expected. So why did the market basically go nowhere? What gives?
You know, the best way to think about what happened is to picture a giant tug of war. But this wasn't just two teams pulling against each other. Nope. It was actually three. And they pulled the market into a complete and total standstill.
So let's talk about who exactly was pulling on the rope here. We're going to break down the three competing forces that left the market pretty much stuck in the mud this past week.
Okay, first up, you had the bulls. They were pulling hard. They were fired up by those strong bank earnings. There was a collective sigh of relief when the CPI inflation data wasn't a surprise, and the chip sector, well, it was looking strong again. These are all good things that should have sent the market higher.
But pulling with just as much force in the opposite direction were the bears. You see, the market is slowly getting the hint that the Fed might not be cutting interest rates as soon as everybody was hoping. And on top of that, there was new chatter about maybe capping credit card interest rates, which kind of spooked the financials. And, with a long holiday weekend coming up, a lot of traders just decided to play it safe and sit this one out.
So yeah, that explains the stalemate. But if you only looked at the big headlines from the major indices, you absolutely missed the real story. We've got to peel back the layers here.
And here's what I mean. Just look at the numbers for the big three. The S&P 500, the NASDAQ, the Dow, they barely moved. Looks like a total snooze fest, right? A week where absolutely nothing happened? Well, that could not be further from the truth.
Because look at this. While all the big guys were just treading water, the Russell 2000 index, that's the one that tracks all the smaller companies, it surged up over 2%. It actually hit a record high. This was the hidden headline of the week. Money was definitely moving, and it was moving into small-cap stocks.
And you could see this split at the sector level, too. It was a real tale of two markets. On one hand, you had semiconductors rallying, just on fire after great earnings from TSMC. But then you had healthcare stocks getting dropped because of fears about potential government reforms. It was a market of haves and have-nots for sure.
So why the sudden love for the little guys? Well, it really boils down to three things. First, investors started rotating money out of those really expensive big tech stocks. Second, smaller companies are generally a bit more insulated from global trade drama. And third, frankly, they just looked like a much better deal, valuation-wise.
So that's the story of last week. But now we've got to look ahead, because there's a huge wave of earnings and data coming that could either pour gasoline on this new trend or just stop it dead in its tracks.
Yup, earnings season is about to go into overdrive. On January 21st, we get Netflix, which is always a great read on consumer spending. Same day, Johnson & Johnson reports, which is a huge bellwether for that whole beaten-down healthcare sector. And then, on the 24th, oh man, all eyes are going to be on Intel to see if its massive turnaround plan is actually working. And here's a look at the broader calendar. It's really all about earnings, until we get to the end of the month. That's when we get the main event, the Federal Reserve's meeting. Every single word will be put under a microscope for clues on interest rates. And then, right after that, we get the big GDP data. It's going to be a busy couple of weeks.
All right, so what does all this mean for you and your portfolio? Let's try to translate all this news into a simple, actionable game plan.
Okay, let's keep it really simple with a three-step framework. First, if you're a long-term investor, this is a fantastic reminder to just check under the hood. Are you maybe a little too concentrated in just a handful of big tech stocks? Second, if you're a more active trader, this rotation into small caps is a really powerful trend. It's definitely worth looking into. And third, and this is for everybody, make sure you have some cash, maybe 10 to 15% ready to go. That gives you the firepower to jump on opportunities when the market gives them to you.
And that really leaves us with the million-dollar question for the next few weeks, doesn't it? Was this week just a fluke? Or are we actually seeing the beginning of a major shift in market leadership away from the giant tech companies that have ruled for years and into these smaller, maybe more value-oriented stocks?
So, will this rotation continue? The answer is going to unfold over the next few weeks, and we'll be here to track every single move. So to make sure you don't miss our next market breakdown, go ahead and hit that follow button. We'll see you then.